Yeah, hi everyone. So we're ready to start. Tom's ready to go. So we've got Tom Williams, of course, and Rita and myself, Peter. So I've started the recording, and without any further to do, I'll pass you over to Tom Williams.
Thank you, Peter. Thank you, Rita. Hi, everybody. Tom Williams here. Usual, speaking to you from Worthing, a nice little resort town on the English Channel, the Riviera. It's pouring with rain, unfortunately, at the moment. Dallas is just bringing us in cups of coffee and tea. You can hear us stirring away. Now, what's interesting with Dallas, that she's actually been invited to Buckingham Palace to meet the Queen. No, I haven't been. Oh, yes, she has. She's very modest, and she's got to go out and buy a hat. You haven't got one, Rita? Because she hasn't got a hat. You have to wear a hat when you go to see the Queen. And the reason apparently she's been invited to Buckingham Palace with a few hundred others is that she was a member of the British Red Cross for many years and did a lot of work. And I suppose a way of thanking her. Thank you, Dallas.
I was going to get a personal thank you from the Queen. She's going to suss me out.
Oh, is she? So there you are. Can't do better than that. Anyway, we've got a 5-minute chart up of the S&P Mini Future. And, of course, this is the, not the cash market. This is the futures. And, of course, it will keep in line with the cash market. And there's many arbitrage traders wandering around the floors that ensure this. They've got special formulas, and if they can spot an opportunity, they will buy one, sell the other one straight away and make a small price difference. It's out of the reach of most people because of the amount they have to do, but money they have to involve. But this ensures that the future runs with the cash. And I've said many times in the past, it's a cash market where the equity, where the value lies. And but the future follows it. But also keep in mind that may be clouded over slightly because those traders that are in the cash market also trade the future. And they know perfectly well when they're going to do a deal in the cash market that'll move the price, and therefore they get in on the future first or very early. And that's why some sources say it's a future moves the cash, but it's not. So cash moves the future. But that's what's going on. Anyway, here we have a 5-minute chart of the mini S&P, and it's certainly coming up with a few signals that you can that you can scalp, make some money. Now, first of all, we've seen a down move. Now, you have to have a down move. Right, notice how that red trending system works. You have to have a down move because it makes the market vulnerable to professional money, one or more groups, thinking, right, we can go in now because it's fallen. Okay, and there's a stopping volume here, look. Now, admittedly, there is some what appears to be stopping volume here. Right. It didn't work out as such. But you notice, if that was genuine stopping volume, they don't mess around. Look, next bar is definitely clearly up. Where here, it's not, is it? The market's faltering, look. Okay, so anyway, we got a nice signal, automatic signal here. And it tells us we've got a test after shakeout. Okay, read the dialog box. But we know that when the market has fallen, sorry, it's running live, has fallen, right, some considerable way, it dips down in what we call fresh low ground. The spread appears to be reasonably narrow, right? The volume or activity is very high, and on that high volume or activity is closed in the middle. That's got to be professional buying moved in. And the computer's seen that, to come up with that signal, look. Test after shakeout. So read that dialog box, because everything we know is in there. Right. Now there's another principle here that I mentioned many times recently. We have a no demand up bar, look. Okay. Now that means that at that moment, professional money have withdrawn their interest on that bar. Now don't forget, they're looking at this, they've seen this, right? And because there's so much money at stake, they have to move with great caution. Now, if the market is very, very bullish, still, despite that no demand, they will test next bar. If it's still bullish, but not quite so bullish, they test 2 bars or even 3 later. And there's a test, look. Test, telling you it's a test, look. Excuse me. A test is a down bar, right, closed near the high and the volume's low. Now look, if we look down here, right, well the bar's level, but it went down originally. Volume is low, look. Spread is narrow, close high. That's a test. Computers tell, that's what brought the signal up. And the reason is they've tested it because of this no demand here, look. They're not quite sure what's going on, so just to, okay, on that test, up it goes, widespread up. They backed off again. There's not a lot of selling pressure here. However, right, we do have some weakness now, look. This is an upthrust. All right, we have an automatic signal. All right, ignore the signals at your peril. All right. It's just going sideways at the moment, look. Professional money, we've seen that, obviously. Right, they have marked it down a bit here. The volume is, there's not a lot of selling pressure there. But that is an upthrust, a sign of weakness. Now you could draw 2 trend lines on this, Peter. First 2 lows and the first high. Peter's going to draw a trend line. Wyckoff, first 2 lows, first high. They are. Now they're very good guideposts for you. Very, very good. The failure of the market to go to that top trend line on that upthrust is a built-in sign of weakness. So we definitely have some weakness crawling in. Now, if you follow this 5-minute carefully, right, you can make money scalping. Scalping is that you're in just for 10 minutes, 5 minutes, 15 minutes, or whatever. Some people like that. Okay, now, are there any questions, please, about this particular chart? This is a current chart of the S&P Mini Future. Rita says there is. Hang on.
Yes, question from Keijo. What is the difference between a no supply and a test? What is your criteria for a test to go long in accumulation? And do you go long on no supply? I remember Seb talking on a London symposium when we had a test. We need to have an up bar before the test. So Tom, difference between no supply and a test, and what criteria, and would you go long on a no supply?
Well, it should be very, very obvious to you. What's the difference between the night time and the daytime? Right. Up thrusts happen on up bars. Testing appears on down bars, exact opposite. Right. And a test is caused through the professional money of seeing some hesitation in the market. And they just want to reassure themselves, right, that there's not big sellers hiding away in the woods there, because they hate each other's guts, all these professional players. They don't like each other. Well, they may drink together and slap each other on the back, but when it comes to trading, it's a different story. A test is a markdown, right? Always on a narrow spread, volume is low as you compare to the previous two bars, usually closing in the middle. That's a test. And you see it follows very, very often no demand up bars. If the market's very bullish, still strong, they frequently test on the very next bar, as we've seen in the past few weeks. If the market is still strong, but not quite so strong, sometimes it takes 2 or 3 bars for it to happen. But they inevitably will test. What was the rest of the question, Rita?
Would you go long on a no supply?
No. Why should you go long on no supply? No supply is weakness at that moment. Professional money have withdrawn their interest for the moment. So why should you don't go long, you follow the professional money. That's what you're doing. Anything else there, Rita? Right, we have somebody, Eleanor would like to look at copper. Right, so we have to look at daily charts for that. I don't have the intraday charts for copper. Peter's just making sure the daily charts are uploaded. Apparently the biggest supplier of copper comes from some African countries, I believe. It's traded in London. Just taking a few seconds. There it goes. I must admit, this end of day program is very, very good. Copper. Must be copper on the continuous charts. We're just trying to find it. You got it? Continuous contracts. Yes.
Eleni, do you know the continuous contract code? If not, Peter, wheat. But Ian says he read in The Economist the other day that China accounts for 40% of the global demand for copper.
Yeah, they're the buyers, but they don't produce it. What's that? Well, I thought we were looking at copper. Well, obviously, well, that chart's not correct. It's vaguely correct, but all that gapping up and down is the way the data is presented to us isn't right. It looks as if they only produce figures certain times a day, look. We just see HG. I thought I've seen copper there. Well, copper is certainly a commodity, and traders that trade copper, they specialize in that. And a copper trader doesn't normally trade anything else. Peter's just trying to find if we've got the copper data. Well, the future would be good if we got it. We don't apparently have it. Oh, is that copper? Eleni, does that look right for copper?
Yes, Eleni went long at 297, Peter. Can you put that out?
Right. That's a good spot to go. Very good. That's followed by a test. Well, that certainly looks more bullish than bearish, doesn't it? Can you put 20 bars up? Yeah. So I can see it better. That's better. Well, that there looks like a bottom reversal. And that there looks definitely like a test. And the volume is low. And we've actually got signal on it. Test. That's why it's gone up, look. Copper's gone up because that test there. Testing after this bottom reversal. And even way back here, I can see there's a definite attempt to shake the market out. Here. They mark it down, mark it up, fair enough, but this test is a giveaway. There's a down bar, look, relatively narrow spread, closing near the high, low volume, has actually come up with a signal. Test, telling us exactly what we've told you. So that's why it's gone up. A good show for spotting that. Very good. Very good indeed. It's all there if you can spot these principles appearing. But are you watching copper at the time? This new system that we're working on, Gavin's doing most of the work, will hopefully pick up all this stuff to alert you at least, so you can go and have a look at it. Any more questions, Rita?
Not at the moment. So if anyone's got any charts, ask them if they've got any charts.
Put the S&P back up.
I've got a quick question, Tom. That one there.
Uh,
That usually tell you.
well, well, something odd has happened. So odd, in fact, I'd leave it alone.
Having said that, if you look at the weekly, which we're nearly towards the end of the week now,
Yeah, we do have.
followed by that.
You're quite right.
But that's quite a long term look at.
What is this? We're
Apple, the technology company.
oh, Apple. Well, we've been bullish on that for some time, haven't we? Long term.
Right, S&P. 5 minutes.
Put daily chart up.
Daily.
I think it is daily.
He's asking for weekly, actually, of the ES.
Yeah, put the weekly up.
There you go.
Right, this is a weekly chart. We can see that it's attempting still, see by the trend lines here, look. It's trending up, trying to. However, it's been held up by a lot of supply. That looks like a top reversal. Up bar, blue up bar, there's a bit of supply on there, look. Now this is an up thrust. It's a sign of weakness and there's no demand. Very low volume, look. That's why it's come off. But there's a 2-bar reversal here. But that looks like weakness there. That looks like a small attempt to up thrust. Put the daily up, Peter. Now this is daily. Now, we looked at this in our newsletter last Friday, last Sunday. Now, admittedly, this is the holiday period. So we looked at that bar and we said, if you can believe the data, that represents no demand, just like the computer thinks it is. Right. But it's a holiday period, fair enough. Now, professional people are looking at this stuff as well. And this is what they're going on, supply and demand. Now, yes, there's no demand, right? You might say, oh, well, it's a holiday, you know, but still no demand there. They would have seen that. And inevitably what they do, when they see weakness, they mark it up on the next trading day, look, deliberately. And that's gone up, look, on no demand. Now that is true no demand. The market's fully opened here, look. Look at that low volume. And we've now got a proper signal, right? So if you go short on that, you may be caught out, but wait for the next opening bar and see what happens. On that no demand, look, it more or less went sideways for 2 days, 2 bars, look, which is also weakness. And then it's come off. This is today's action to come off. Now it's interesting. Down here, of course, we are over sold. It's plummeted down into fresh low ground. It's a bottom reversal. And we've got a signal telling us, which it is, stopping volume. Widespread up as it pushes through that trend line. That's the weekly chart. Sorry, no, not weekly, daily. So thank you, Peter. Okay. Now we're slap bang in the middle of a trend line, pair of trend lines. So we are vulnerable here to a test or something and that market go up to that top trend line. But we're also vulnerable to have an upthrust or no demand, which will make it fall. It's not clear at the moment, not clear to me anyway. But the more you look at this stuff, look at the different time frames and know you're looking at the action of professional money on the other side of the trade. They can see what you can see, probably even, well, better than we can see, put it that way. And they will definitely trade in accordance with that. Are there any questions, please?
No. So ask them.
Put up the
You ask them if they've got any charts as well that they'd like.
yeah, put up the pound hour. That's it. Now, Gavin shorted that.
It was the Aussie dollar, wasn't it?
Yeah, the Aussie dollar. What's
You
this?
said the pound just
No,
now.
sorry. Yeah, the Aussie dollar. There it is.
Oh, yes.
Now, that's what he shorted. And they sent out an alert, or he did. First of all, you've got top reversal look, which is a sign of weakness. There's even a signal on it. Okay. Supply, on that supply, bang. Now, professional money are fully aware of this, right? So they want to draw the last drop of blood they can out of the trade. So what do? They have an upthrust. They ram it, artificially mark it up, look. Catches loads of stops, misleads many traders as possible. On that markup, it collapses, closes on the low. It's all done deliberately. Look at the very high volume. Must have been selling for it to close, go up and then close, collapse on the low. Gavin was short of that, which was good. And I believe he sent an alert out. Now that weakness will stay there. And you may get little up moves up along here, yes, but that weakness is there in the background. Any questions? Yes, hang on, they are Rita.
Crude oil. Okay, John would like Tom to look at crude oil, so while he's putting that up, and John, you say, did we make a recording last week? No, there was no live on Friday last week because it was a day off, it was a holiday here. Okay, so this is crude oil, Tom. But we did do a newsletter, so that should be there. Crude oil.
Got it?
Yeah, John.
Right, crude oil. Well, a little bit of supply there, isn't there? Increase in volume, look, on these two bars. They had an attempt to test the market. Right, there's not a lot of selling pressure there, look. So it allowed it to drift up for a few bars. Up on a narrow spread, look. That's not good. Now, widespread down on increase in volume like that is traditionally a sign of weakness built in there. So if you see something now like no demand, what's that say? No, yeah, there we go. Right, no demand, then you would be shorting that. Okay? No more. $20. Well, yes. Are there any charts you would like us to look at? Type it in, please. There's obviously something wrong. That's... Yeah. Looks like something wrong with the data here.
Someone says Google is G-O-O-G-L.
Oh, it's changed, isn't it?
Okay, so we've got two other requests, D-N-K-N. All right. Okay, so D-N-K-N.
DKNN.
D-N-K-N.
What is it?
Nothing yet. Be on Tom. We'll put it in first now.
D-N-K-N.
Be on Tom. D-N-K-N. This is end of day.
Thank you. Right, well, we do seem to have some stopping volume there, look. Right, okay, so up it goes, bit on that. Not a lot of selling pressure, look. Now, they're marking it down, but there's too much volume. This is, for this to be bullish, this volume has to be obviously lower than this. But it isn't it? That's why it's crawled up so long. There's supply here. Now this could be buying here, but certainly not the place that triggers off a positive bullish move. What we'd like to see now, if this is bullish, this market to more or less go sideways and up a bit like this, and then come back down to that level. It's the level that's important, and test it. If when the market comes back down to that level, the volume is very low, then you're going to see an up move. But right now, there's too much supply there for that to go up. That's how I'm reading it. But looks like some buying on that bar. What is buying? Narrow spreads, close in the middle. But the problem is you do have what looks like a bit of a top reversal right behind you. Okay?
So RTN. Yeah, so Edmund would like us to look at RTN. Centrica, Peter, we don't have that, do we? Because that's UK, isn't it? Sorry, Ken, Ian, we don't have Centrica data. We don't have UK data at Tom's. RTN for Edmund. Philip Friston is very good on UK. No, he's not here, Tom. No, he's not in the room. I was just saying that Philip Friston is the man for the UK. Okay. RTN.
Yeah, well, the supply present here. Well, this looks like an attempted shakeout, doesn't it? And there is heavy supply present. Down bar, massive volume. But saying that, there was some buying in there. But if that was going to go, and this gap down look, and this top reversal business here, this is supply present. Now, you may see a few bars up, but that's not going to go anywhere unless you see a test. A test is a down bar, right, narrow spread, close in the middle, volume less than the previous two or low. It tells you all the details at the bottom here, exactly what the bar is. I've just told you. We don't hold any secrets back, which is interesting. We don't have to hold any secrets back. We don't have to attempt to make it mysterious or mislead you in any way. Get to grips with supply and demand. You know what we know. Now there is a signal here. Selling pressure. And the reason why the computers come up with that is because it's an up bar weakness when it appears on up bars, because professional money with the size of their orders have to sell into the market as it goes up, right? We know it's selling because the spread has narrowed. Something caps the top end of that market, but they just allow enough to allow it to go up, look. But it's up on a narrow spread, and the volume is sort of just above average, look. But the obvious confirmation comes next bar, look. Widespread down, close lower than the close of the previous bar. Professional money would see that, so they mark it up. Blue up bar, really on no demand. And then they pull the plug and bang. Now, I know it's easy to see in hindsight, but if it was there in hindsight, it must have been there at the live edge of the market. So you learn the principles and learn to recognize them and believe in them. Okay? Any more questions?
Ken says, is there any way of determining when smart money are going to do a markdown?
Is there any what?
Way of determining when smart money are going to do a markdown?
Well, we don't use any mathematical formula, so you have to develop a feel for the market, I'm afraid. And they mark it down when they're struggling to mark it up, to go up. Very often, the previous signs are no demand. That's the one that seems to trigger it off. No demand. And they're having trouble keeping it going up. Now they know if they can shake you out, in other words, mark it down very rapidly and extensively, right? This will shake out many traders, catch many stops. Keep in mind there are not hundreds but thousands of stops above and below these actively traded markets. And that will create like a vacuum, and that will give them, should we say, a leg up. they're not concerned about the rapid move down because they're the ones doing it. They're fully aware of it. So it doesn't worry them like it would worry an outsider. So there's no sure way except that if you see a bull move and it starts to round over slightly and it's going up constantly on no demand, narrowish spreads, rounding over perhaps, this is normally a sign of weakness, and they will, if possible, have a shakeout where they rapidly mark it down. They'd like to use some bad news if possible. And they know if they successful shakeout, that will create like a vacuum above the market, and they're better to mark it up.
Peter, what's BIS.O? ProShares Ultra Short List. We don't have that, do we? Okay, so Paul is saying, can you please take a look at the daily and weekly charts of BIS.O, the ProShares Ultra Short Nasdaq Biotechnology ETF. Gavin sent an alert on this some time ago. We've just checked and we don't have the data for that, but that's a question for Gavin. If he's doing his, what's it called? Closing bell, you could ask him then. Edmund says, look at Facebook. Please look at Facebook. Beautiful weakness. Yes.
Right. We're going to look at Facebook. Peter's just typing in. Here we go. What they're saying is weak? Yes. Well, this bit here is accumulation, look, because that's stopping volume there, and this is the test. And that's another test, look. Up it goes, no demand. That is really no demand, look. What's that say? Weakness has appeared. Weakness has appeared. Certainly has.
Gaps there as well a bit, didn't it?
Yes. I personally wouldn't think weakness is all that obvious, although it does look weak because you've got this up bar, narrow spread. And then this here, look, they've marked it up during the day, look. So that's weakness there. And the volume is quite high on this red down bar. But saying that, we've got to be careful because we've got this and this in the background. And that test there, look. It's not all that obvious to me at the moment. Well, if you're not sure, yes, as Peter said, turn the page because you can lose money so easily, and the way they handle these shares is quite deliberate. Remember, these shares have specialists on the floor of the New York Stock Exchange. So you can imagine if he's a specialist in this, he'll know perfectly well what the status is. And he's certainly going to mislead you as much as possible, because that's how he makes his money. It certainly looks weak, but it's not terribly obvious. Not to me. The reason is you've got this kind of shakeout here, And this is what appears to be accumulation. It's an interesting chart. You need to watch this carefully. If it goes up now on no demand, or a clearer upthrust in this, something like we saw in that Australian dollar, then you could definitely short that. But right now, to me, it's a bit unclear. Okay?
KJ's saying look at the weekly chart, Peter.
Right. Look at the weekly chart. Peter's going to put it up. Finished. Right. What Peter said was this is a weekly. It's not working. That's it. And this isn't complete yet. It's not far off it, look. Now on a weekly, it doesn't look all that strong, does it? It doesn't look strong at all. We've got an upthrust in the background. Clear red down bars. A blue up bar with high volume. Markets don't like high volume on up bars. And look how it closed in the middle, or well down on that activity. So that's supply. Professional money who's seen that. So the next bar's up, but it's no demand, look. This is up on a narrow spread, which is also weakness. That does look weak, I must admit. Okay. I certainly wouldn't want to rush in and buy that.
Hello, Ian. What's the Bombardier on the Toronto Exchange? Do we get that? We don't get that data. No. Okay. All right. So you want to put up the ES or the Dow for the last few minutes? No more questions, Tom. See what's happening now.
What are we looking at?
5 minute yes.
Right, thank you, Peter. Well, we can see it's certainly been marked down. We looked at 5 minutes earlier on, didn't we? No demand. I can't see any stopping volume of such. So that looks if it's still going to carry on down. It's interesting how this trading system works. Right. If the close is lower than the close of the previous bar, which they do deliberately, it comes up as a red bar, look, it's still down. Allow for one up bar. Ignore level bars. That black's level. Widespread down. Up. Not a lot of selling pressure. This looks at the moment if it's going to go sideways. But certainly doesn't look as if it wants to leap up. Okay. Anything else, Rita?
No more questions.
the Dow or something? Well, we'll have a look at the Dow. Yeah. Should look very, very similar, which it does look. Don't forget, Dow is part of the S&P 500. That's why it looks very, very similar. But there was your weakness. I can't see anything outstanding to say, look at that, to be quite honest. It's Friday. I know you have to be a bit cautious about Fridays because they will attempt to mislead you to the extreme, if possible, by Friday's action. I know that. Because that way, then they mislead all the TV reports, newspaper reports, magazine reports, even brokerage reports will be looking at that. And most of the people that look at it don't understand the market. Okay. It is possible to draw some trend lines on that, Peter. First two highs, first low. I like to see trend lines on the chart if possible. No, first two highs. Yeah. No, there and there. Yeah, first high and there. And the first low here somewhere. That's it. You can see we have a very orderly downtrend, look. When you see it runs in a very orderly manner down between those trend lines like that, at least it shows you professional money is in control of that move. And they're sticking to what they know they need to do. And that's why it's orderly decline like that. You would expect to see stopping volume if that was to stop going down like that. But I find it difficult to look at the chart without drawing trend lines on it. No more questions, Rita?
Just one for Peter. When are you going to recordings? So Colin's asking, so that the last few sessions are missing on the VSA Club. Is that right, Pete? We didn't do one last week. Yeah. He'll check the week before when he puts this one up.
Yeah, so I think this is Peter here. I did upload the last one that was present, which was the week before last, but it may not have been entered into the database as such, so I'll check that out when I do the upload for this later today. So look out for that. We're doing a newsletter on Sunday, I expect. Yeah, Sunday. So look out for that on the VSA Club. And I think we'll wrap up now with that and say thanks very much for coming along. Have a good weekend, and we'll see you all next week. Gavin's on later, doing his closing bell. So I'm not sure of the time, but obviously it'll be in the VSA Club or on an email notification. So with that, we'll say goodbye and see you soon.